Hi everyone, thanks for tuning into this video, and you can see me right over here, guys. I'm enjoying my new home and lifestyle. Just recently I moved up to a small town called Wasaga Beach. You can see that right here, and it's on a very large body of water called Georgian Bay. So it's actually quite beautiful up here. It's the longest freshwater beach in the world, and all sandy, and you can walk in. The water is really clear and hard sand bottom. So just a terrific place to enjoy not only a summer vacation, but all year round. Now, even though I'm on my summer vacation and it's hot outside, where the best place to cool down is by the beach and go swimming, I'm going to change the temperature and cool down and chill. Take a look over here, guys. This is a winter sport in the Winter Olympics, and this is a ski jumper. And the interesting thing is that I love watching this sport. It's actually quite dangerous if the skier makes a mistake going down the long ramp before takeoff, and also even on takeoff and landing, it can be quite dangerous. So I love watching the sport. It is one of the best examples to explain how momentum trading works. Okay, now the skier's journey starts at the very top of the ski jump, standing still and waiting, then pushes off to ski down this long ramp and accelerate with teeth shattering speed, then lifting off the end of this ramp to fly upwards into the sky before gravity pulls the skier back to earth, and finally landing on the snow. Perhaps there's a new world record or Olympic record for distance. And this is what this exciting sport is all about. Now, in this video, we'll see how momentum works in our trading plan. Similar to what a ski jumper experiences on a short journey down a ski ramp, then lifting off to new height and distance. And let's not forget that we had one open trade well back from about a couple of weeks ago that we kept open. It was just going sideways. Take a look to see what happened to this open trade. And guys, watch this video, and not only are you going to learn about this single trade that we had left open for quite a long time, but you're actually going to learn all about momentum. So stay tuned, guys. And before we go to our live chart and this one remaining trade that we had open before I went on vacation, I need you to take a look at this right here. It's my humble disclaimer. You can read it. You can pause the video, guys. It's very important. Basically, I'm offering you an educational program only, and I'm trying to teach you to trade correctly and not give you any specific advice. So if you want to read the rest of it, go ahead, guys. And just so that you know, this is me again. My name is Martin. I'm a proud Canadian trader. Take a look right here, okay, at this maple leaf here. And my email address is mskyj007 at gmail.com. I give you this because if you want to receive my free trade signals, guys, the only way you can get them, and like I said, there's no charge, no obligation. I'll be sending you my free trade signals during the week after I get back from holidays. So that's what you got to do. Send me your email to my address right here, and I'll get you on board the VIP list. So more on this a little bit later on, okay? So the very first thing is to talk about this loan trade that we had kept open all the way from August the 3rd, okay? So you can see that right here. It was the sell euro JPY, okay? And guess what? As of, I believe it was yesterday or today, it became a huge winner. So congrats for all of you who kept the trade open and exercised your patience, guys. It ended up giving us 67 pips right there, and it reached our second take profit level, okay? Now, this is after 9 trading days later. So, my goodness, we kept this open for a long time, all the way from August the 3rd. Now, there are no recent current trades for this past week or last week because I'm still on vacation and will be on vacation till beginning of September sometime. So all we can talk about is that in the previous week, we did gain 67 pips on that one trade. Okay, so that's pretty good, guys. Most of you are probably also on vacation, and if you are trading without my help at all, maybe you're trading on a demo account or you're trading on a real live account. It's up to you, but take it easy for now until I get back, guys. And so that takes care of that. We're going to look at this one trade right here. Guys, right here, let me just get my marker out here. Okay, you can see with this candle right there, okay, at the end of that trading day, that's where we had a sell trade. This is the information I sent out by email, guys, and all of you who want to receive my free signals will get this every time there's a new signal, okay? So you'll get this information, which will give you the either a buy or sell entry with the level right there, the stop loss, the first take profit level, the second take profit level. Okay, so you can see basically price went up, down, down, and then finally all the way down. Okay, so you can see that right here. Candle closed on the weekends trading, like Sunday, Monday's trading right there. And you can see it did hit our second take profit. Our first take profit is 128.96. So congrats if you had two positions open, and this first position would have closed there, guys. And once price comes back down, hits our second take profit, you can now move. Here's your stop loss. Originally, guys, at 134. Your stop, it's part of our trading strategy and rules, guys. Here's the stop loss. You move your stop loss just a few pips below the original entry, which is 129.33, guys. And I always suggest at least 6, 7 to 10 pips below the original entry. And guys, if your second position, you can close your second position if you want, because this is a huge candle. We're down. Take a look here to the left, previous support level. So from here, price will either go down lower, but most likely will go up a bit higher. This was a big, huge candle, guys. So with a lot of momentum, and that did give us the win. So anyways, I would probably close it, not keep the second position open. So that takes care of that, guys. And now we're going to get to the main lesson, which is all about momentum, guys. So pay attention because you're going to learn quite a bit here. So what is momentum trading? Okay, to really fully explain that, we'll go back to the Olympic ski jump hill. You can see here's the down ramp. Here's the takeoff part of the ramp. Here's the snow where the skier has to land. So let's talk about momentum. And let's pretend just for a second, guys, that we have a skier here at the top of this ski hill waiting to ski down. Okay, so let's take a look. The skier is standing tall and proud, representing his country here, guys, and is still, and then it's given the signal to go down the ramp. So the skier goes down the ramp, gains momentum, and accelerates. So the momentum is increasing right here, then comes down all about here, and then flies off, okay, with his skis. And once the skier gets to about this area, momentum starts decreasing. Gravity is going to start pulling the skier back down, right? So we have an acceleration of momentum here. So we can say momentum is increasing. Momentum is increasing. Now all of a sudden, the skier comes back down, okay? And momentum is now increasing on his downward journey, right? So up here, momentum was decreasing or stalling, and the skier then all of a sudden comes back down. The earth gravity pulls him down, and then once down here, gains more momentum. The acceleration starts to gain until down here there's a flat portion, and the skier finally slows down and stops and looks up to see his distance. So you can see a wide variety of different aspects of momentum, increasing momentum here, momentum falling or stalling I'm sorry, not falling, but stalling or decreasing right here. Then as the gravity pulls them back down toward the lower portion of the ski hill, momentum increases again, increases, and then finally slowing down as the ski hill becomes flat and gives the skier a place to stop. So you can see what's happening. It's down, up, down, and we call the downward portion acceleration, deceleration, acceleration, deceleration. Okay, and these are the different aspects of momentum, because once we have momentum and more buyers coming in or more sellers coming in, then that could depict the start of a new trend, right? And enjoy gaining pips with the middle portion of the trend price move. So basically, price is coming down, and then we have momentum price going up on a currency pair. More buyers come in right here, okay? And we're not really interested in getting in at the absolute low, but we're interested in getting in the middle of the price move as it's moving higher, or middle of the price move as it's moving lower, right? Momentum trading is about how fast or slow price moves in a given amount of time, and how you, the trader, can capture a portion of that price movement to make some profit. So again, it depends on how quickly price goes up, and we want to enter and then exit by gaining a bit of the uptrend, because we never know when it's going to stall again and price is going to reverse down again. So on a downtrend, we want to get in as soon as we can, capture the middle portion before price comes around again. That's what we mean. Momentum trading is about how fast or slow price moves in a given amount of time, okay? And we want to always capture a portion of that movement. So let's take a look here further. And swing trading plan with momentum. Now, an increase in momentum can happen in a very short space of time as price increases or decreases. So take a look. Price is moving higher, but you can see the candles are getting smaller. Okay, candles are getting smaller. Price is going sideways, comes down a bit, comes back up a bit, okay, then all of a sudden falls like a rock, okay, and when it comes down to right about there with this big huge candle, that's the beginning of a new trend. Momentum has increased, guys, and then we get in at some portion of that trade and make our pips. Okay, so price drops or price movements up higher can happen in a very short duration, guys. And if you count the candles, let me just take that off. Basically 1, 2, 3 candles. So from here, okay, all the way to here, this was a huge price drop with huge momentum, guys. And again, then it started to reverse again. And then now perhaps it's going back down again right over here. Okay, so that's what we mean. Price swings and momentum trading is great if we're a swing trader, guys. We never know when price is going to turn. We don't know how strong price is going to come, like how strong price will can be contained in a trend, whether it's 2, 3, 4 candles. With today's markets, guys, they're mostly sideways. The markets are a little bit erratic, so it's hard to get in a trade and then stay in a trade for, let's say, a month or so. Markets usually don't give us that kind of trend. And the markets are pretty erratic with everything that's going on in this world. Okay, tied into the country's economies, the pandemic, and other things that cause prices to either come down and go up and then come back down again. So just like a swing or a pendulum, price moves often in one direction, then few candles later moves in another direction, then moves again in another direction, and it's pretty hard to contain ourselves in a trend. But the idea is swing trading is to make a portion of those moves. Okay, so momentum trading strategies are usually focused on short-term market movements because the markets can be unpredictable and often raging sideways, which I just explained. But The duration of the trade can depend on how long the trend maintains its strength. This is often, again, referred to as swing trading, which I just talked about. Okay, so price is going up, so we're trying to make money going up, price coming down. Here we would not take a sell trade sideways and then get in. We would be getting in either there or here, and this is what we call swing trading. Then getting out and then watching price go up again and then waiting for price to come back down again, because we want to trade in the overall direction of the trend, which is downwards, right? Okay, so anyways, that's that. Let's get on to the next slide and the next part of explaining momentum. Now, oscillating price momentum. Okay, momentum trading works by enabling traders to identify the rate of change in price or volume. As neither price or volume will continue in one direction, right? Trend cannot continue in one direction indefinitely. And usually, as I just explained, the trends are very short term in these erratic markets. So as momentum increases, okay, when a trend starts, it often loses steam very quickly and then increases again in the opposite direction. Okay, so when we think of the pattern of momentum, we can think of it as an oscillating measure of price movement. Oscillating just means down one way, up another way, down again, up again, in different directions. Okay, that's what we mean by an oscillating measure of price movement. And I'll show you on the chart in just a second. The trick is to enter trades in the overall direction of the trade and not on false pullbacks whenever we see price losing steam and reversing. So again, guys, let me just take a look here. So here we see price reversing, okay, and hitting this area here, going sideways, and then we're looking for a sell trade. And guys, that might be right there, okay, and or right here, but we want to trade in the overall direction of the trend. And when we see price going down, what I mentioned here, we don't want to trade the pullbacks, because we know in a downtrend there are always pullbacks, or price retraces for a bit, okay, and then we want to wait again till price comes back down and shows momentum to the downside, so getting in perhaps here. So the idea that price oscillates, okay, price is going up, it's going down, it's going up, it's going down, it's going up and down. So this is oscillation in price, okay, in the price patterns, and often it coincides with momentum that's coming in the market. Let me just take that off. So momentum's coming into the market right here, losing steam. So momentum is decreasing. Momentum comes back in, loses steam. Momentum, the biggest momentum in price is acceleration here. When price retraces, it's losing steam. Also take a look at the small little candles with the wicks. The tall wicks on the above the candles indicate that the buyers are still in control, not this. I'm sorry, the sellers are in control, not the buyers, right? And then price once again comes down with momentum. So that's what this slide is all about. And that's what this description is all about. Okay, now let's continue again. And we have two momentum entries, guys. Remember, we can see momentum increasing when price goes higher, like in an uptrend, and we see momentum increase when price goes down in a downtrend, right? So when price is going up and there's momentum is increasing, right? Okay, but when price is coming down, okay, often momentum starts the downward trend, so momentum is increasing as well. So momentum increases in an uptrend and momentum increases in a downtrend, and then always steam, we lose steam and momentum decreases right here. And once price goes sideways and starts going up, so momentum is decreasing right there, right? So momentum increases, decreases, or loses steam, and then it starts increasing again as it starts a new trend, a new swing trend, okay? Now, It gives us traders two opportunities to enter trades, usually at the beginning of price acceleration. Okay, so when price is first, let's say, going sideways, okay, going sideways, and then starting to make its downward movement, we have price acceleration here. So at the beginning of price acceleration, this is one area of an entry that we could consider. It forms a possible new trend. This is known as the early trend entry, or the ET, right? So we could look at getting into an early downward trend, and this is called the early trend entry, or an ET entry, okay? And would be opposite for an uptrend price acceleration. Now, the thing is, later, after price has come down, okay, and it looks like we're continuing a downtrend, price usually retraces a bit, usually retraces just a bit, and then starts falling down again. And then this type of entry is a continuation trend entry, okay? Continuation trend entry, or the CT for continuation trend. So we have an early trend, okay, when let's see, price has gone up, okay, price has gone up, price starts to turn around and then and then accelerates on its downward slope. So there's a new trend, possible new trend forming. So we can get in right here, early trend, or after confirmation that a trend is forming, price retraces and then getting in again on a continuation trend. Okay, so that's what we mean by that. Now I'm going to show you a chart example of this right over here, and you can see. Okay, so this is a good chart here. Price was uptrend here with the green line. This is just a moving average, guys. Okay, and it can be the 21 EMA. Okay, that I've already advised you to put on your chart. So right here, price is going up, then price starts to go sideways and stall, but right here, price closed below the line, and confirmed with other filters, perhaps you could see that this could be the start of an ET entry, so your early trend entry, once price has been going up and then looks like price is going back down. So now price comes down, goes back up, guys, and starts coming back down again with this black candle. And so now this right here looks like a continuation trend entry, and also is confirmed by other filters or other indicators that you have in your chart. So from here, you can see getting in here, you would have had a huge price drop, and this would have been an excellent price move. Now, we're in a predominantly a downtrend, okay, and there's different factors to tell you how you can understand if you're in a true downtrend or not. But here we're in a downtrend. Let's just say we are. Price comes back down, and price cannot come back, cannot go in one direction indefinitely. Price has to come back up. You can see right here. So momentum has increased here, bringing price down. Price with this candle right here shows that momentum is now stalled, and there could be possible rise in the trend or reversal in trend, as it's known. Right here, price stalls again, right, with this black candle, but take a look. We want to make sure, and then with other confirmation right here could be another possible entry, CT entry, guys, which is a continuation entry. And guess what? Price drops again, huge move down. The momentum, here's a momentum candle, and we're going to talk about this in next week's video. We're going to show you lots of examples and give you a clearer idea of how to recognize momentum. But this is what's called a momentum candle, guys, and indicating that price will come down. And take a look, guys, it did. Now we have price is now going sideways again. That means momentum is now slowing down. Okay, the acceleration will continue. This could be right here a momentum candle to the upside, and if you want to take reversal trades, this is what could have happened, right? But once the candle goes above the line, this is what we would call an early entry, ET again, early entry. Okay, again, based on momentum, what we see down below and what we see with the individual candle, the side. Momentum candles are generally a lot larger, and we're going to talk about that more in next week's, but they're a lot larger and they don't have a lot of wicks, and they end up, the open is here, they end up usually at the top of their range, the candle range, right? But you can see what happens afterwards. Price went up a lot higher. This is a CT entry because CT entries only happen after a pullback. So price has gone up to here. Price is pulled back with this candle. We have a small momentum candle here. It's not really momentum candle. It's more based on the idea that price pulled back to the moving average and has bounced higher again, giving us a better indication that price is going to go higher again. So you can see we have a CT entry here. We have a continuation entry here, right? And then price comes back down here below the line. Certain things tell us not to take a sell trade, guys, okay? And because the downtrend has not been confirmed, again, take a look here, okay? Take a look. Price has not come back and closed below the previous support level right there. So price instead bounces up higher, closes this big candle right here, almost no upper wick, okay? The candle closes at the top of the range, which shows that the bulls have come in by force. There's good momentum coming in. Getting in here on this CT entry, okay, would have given you a nice profit here. Price had come down a bit and then went up higher again. Okay, so you can see the difference between the ET entries, the CT entries. This is all based on momentum trading along with other filters and indicators, guys. And this is what we do in our free Forex signal. So we're going to get involved in this area a lot more next week when I show you more trading charts. Okay, so let's take that all off and let's go on to the next portion. How to see momentum and the trend. Well, traders can determine momentum trading on their charts utilizing different methods and tools. The free Forex signals uses this. There's two different ways to determine momentum. One is through price action, which is actually what the actual candles or the current candles are doing on the chart in context to previous candles. Okay, so we're primarily looking at the candle structure, the size and strength of the candles. Each candle does tell a story, and we can determine on what we see where price is most likely to go. So the volatility of the candles and price is very important. This is what you see on the charts, okay? This is part of the price action analysis when we're looking at trade entries. And then the other one is indicators. Indicators also are very helpful. There are other graphic tools on or below the charts to help you see the degree of price action, trends, and volatility, right? And we're going to, a little bit later in the video, in a couple of more moments, we're going to talk more in detail about the price action and indicators. Now, they both work hand in hand together for more effective results, right? Generally, one aspect of seeing momentum is not enough. You kind of need both to work hand in hand and to understand how they relate with each other. Let's take a look at how to see momentum again. Okay, two ways, price action and indicators. And by price action, I mean just take a look at the candle structure here, the size of the candles. Okay, so that is price action here, sideways, and then finally take a look at this one candle, guys. It's a huge momentum candle getting in if you wanted to right there, and then you know what happens next. So this is what we call understanding price action, a reversal here, okay, knowing that we price going up, making a new higher low to a previous low, and then being rejected and going up again, crossing over the 21 EMA. Okay, so this is all part of price action structure. And again, simple ideas. I don't want to complicate anything. With the free signals, of course, I'm doing all the work for you, all the analysis. All you have to do is just follow my instructions and take the signal, right? But later on, you're going to learn a little bit more and more and more about price action. And then, of course, we have indicators. By indicators, what do we mean? Well, take a look. This is an indicator right here. This moving average. In this case, it's the 21 moving average. You can look at this indicator right here. I believe that's the 8 moving average. Take a look down below, right? This is like the MACD here, and that's showing you with these bars, okay, these are the histogram bars or the histo bars, and what you see and what they show you strength and momentum. Okay, so momentum to the downside here. Let me just take that off here. We got momentum to the downside, then all of a sudden we have momentum that has stalled, okay, and then possibly momentum to the upside, but because we're predominantly in a downtrend, okay, you can see we don't want to take a buy trade. We wait, and again here you can see right here momentum to the downside. Momentum is increasing, and this is what these histo bars show you. So getting in at the proper time could again give you a lot of pips for you to make. Again, momentum to the upside increasing again. Here we see momentum is stalled right there, but momentum increasing. Momentum bar right there, closing above the line. Getting in, guys, would have given you a nice profit to the upside. And that's what we talk about. Indicators and price action, looking at them both and understanding how they relate to each other, and then taking a proper entry that most likely gives you the best odds, right? Now, not every entry works perfectly, and you're not going to be right all the time, but that's okay, because that's where risk management comes into place, and we also take care of that with the free signals program. Okay, so let's take a look, guys, to the next portion here. Price action momentum. Again, price action is what price is doing right now compared to what it was doing previously. And by price action, we mean basically looking at the candles. Okay, guys? So the candles gives us a story, tells us what to do. With the candles, every time you look at some of the current candles on your charts, the candles will give you the direction. So we want to look at the direction of new candles. Is it bullish or bearish, right? Okay, so there's one thing. Size and volatility of the new candles. Are they small or large candles? That will give you a clue as to what's going on, and is part of momentum. Candle strength, with or without wicks, and the wick direction. Candles sometimes have a wick on top or down below, like we call them lines or shadow lines or whatever. But that's what we mean by that. And then finally, the relationship of the current candle to the previous few candles. How does the current candle compare? And what's happened with the current candle as opposed to just the previous candle, the previous 2, 3, 4, 5 candles, right? If the previous candles were in a sideways range and all of a sudden the current candle is a huge candle with a lot of pips, then momentum has certainly come into the markets and buyers have certainly come in. Now, I know I always talk about price going up and buyers and that, but it's the same, guys, for sellers. So if you have a huge momentum candle to the downside, that means sellers are coming into the market, and we can often expect price to continue going back down. Okay, so again, I'm not here to explain everything. We're going to look at the charts next week in detail and how this all fits in. But I did want to give you this as a primer. This is probably a very important video. Take a look right here. Price action momentum, guys. This is great. The size of the candles give you the strength of momentum and the direction. You can see a big up candle. The candle is getting smaller. That means the momentum starts to slow down. Then we have a small little candle or a doji or a candle with a large wick, and this often gives you clues and tells you that there's very little momentum, which means that price from here could turn around and come back down again. So another swing, swing up, swing down. It's part of swing trading, okay? And we're talking about the daily candles, guys. We're not trading intraday or scalping. Our charts are daily, and we're looking at the individual candles, which shows you a day's worth of price movement. Now, on the downside, guys, okay, downside price could again reverse and go higher, which starts a new trend higher. But big candles show you the big downward momentum. As the candles get smaller and smaller, as price is coming down toward, let's say, a support area, okay, support, then price all of a sudden gets even smaller, and then we have other clues which show you that momentum has now completely decreased, it's stalled, and could turn its way higher, providing us with a new uptrend. Okay, so this is actually a very good chart, guys. You may want to stop this video from time to time, take a look, and remember or make some notes. Okay, now let's take a look right here. This is really good, guys, because when candles lose control, this is what you can expect. Okay, so when a candle closes here just above the 55% level, okay, but it has a tall wick, or could call this a wick or a line or a shadow, upper shadow. This is when the bulls are losing control, right? So price opened here, went down a little bit at the start of the candle's range, and then went all the way up, but came back down. Now, especially if the candle closes even below the 55%, but this is what may indicate that the bulls could be losing control. And then this is the opposite for the sellers or the bears. When price comes all the way back down, the bulls push price higher, and its price settles around there. So this is when the bears are losing control. Okay, again, you can pause the video, and again, this is really terrific, guys. From left to right, these are the most bullish, strongest moves. Okay, you can see what this candle looks like when where a price opens here and closes right there at the top of its range with almost no upper wick, or no lower wick. Okay, so close right there. This is a huge, strong momentum candle. Then when a candle opens here, comes all the way back down, it's pushed down by the sellers, but then the bulls take over and bring price all the way back to the top. So that's a strong candle. Here is more of an indecision, but the buyers are still in control. You can see it's a kind of a normal bullish candle pattern, and then here this is weaker again, and this is when the bulls are losing control. Okay, when you have a very strong upper wick or line. Okay, and then the opposite for the sellers, the strongest selling candle. If you see something like that, and especially let's say if it's an engulfing candle, then you may want to consider getting into a trade. But from left to right, this is the strongest, okay, the strongest, and then we get into the weakest candles. Okay, so again, this is a really good chart, guys, and you may want to retain this for the future. So we're almost finished, guys. Let's take a look. Okay, indicators. Now, we talked about price action. All the candles I showed you in the previous slide, this was all about price action trading, okay? And if you can combine that with indicators, then you're going to have, along with a winning trading plan, you're going to have a really good Forex career. So let's take a look. Indicators. There are other graphic tools on or below the charts to help you see the degree of price action, trends, and volatility. Basically, we're using the moving averages. Using a trio of moving averages is best. Like right now, I've given you one, which is the 21 EMA. You could also use the 8 EMA on the chart. But later on, I'll tell you about the third one that you could use, which will also help determine direction and the strength of the price movement. Okay, so that's what moving averages do. They give us the direction, the strength of movement, and areas on the chart to enter the trades. And then the MACD, which is one of my favorite indicators, it provides important direction and gauges momentum, strength, or weakness. Okay, again, quickly, we can take a look here. MACD right here, obviously showing you direction and strength with these histo bars, right? You can see that right there. The indicator here, when price is below this line, okay, this indicator is a 21 moving average. So when price is below, we only want to take sell trades. When price is above, you can see right here above this green line, we only want to take buy trades. So that's how indicators and moving averages help us this way. And then when price is definitely, you can see above the blue line here, and coming back and being rejected off here and being propelled higher by the buyers, okay, this is an indication of really good confirmation of strength in the uptrend, okay. And this blue moving average would be, let's say, the 8. It would be a smaller moving average, so 8 EMA. This is the 21 EMA, okay. And again, you can see right here the indicators, the MACD with these white histo bars showing you that momentum is coming in the market and usually giving you the bigger candles and a better, clearer idea as to direction. Okay, when these histo bars are above this middle line is 0 here, 0, then we'd be looking at buy trades, sell trades with momentum below this middle line. Okay, this middle line is 0. Okay, so that is that. And yeah, we got a little bit more. This video is a little bit long, a few more minutes, guys, but it's all important part of momentum. You want to definitely save this video on your computer, okay? This is important. Where to see momentum? Okay, momentum doesn't happen all the time. There are times and places to look for momentum. Most importantly, you need to anticipate, and there's the key word. You need to, when you look at the price action, the candles on your chart, you need to anticipate what could happen next and what the change could be in price movement. Now, generally, the start of the London and New York sessions display higher volatility, leading to increasing price momentum. Okay, so that's the start of the London and New York sessions. New York session starts at 8 a.m. Eastern Standard Time. Okay, and the London session starts at 3 a.m. in the morning, and that is like it's Eastern Standard Time as well. Okay, so that's when these two huge trading sessions start, and then momentum also changes at levels of support and resistance, right? So you can anticipate that. You know, if price is going up, you can anticipate price coming back down. Price coming back down, you can anticipate price going back up, right? So that's what we mean, where to see momentum. And I probably have a small chart to show you. Okay, yeah, this is important. What I do is I zoom out. I make the chart smaller to see more of these candles in the chart, right? Instead of seeing close up, I zoom out to see more territory. I want to see the big picture. And guys, I made a special video a few weeks ago about seeing the big picture, because the big picture can tell you what could possibly happen in the future. So again, you can see right here, when price was coming down with momentum, price stalls, comes back up, and comes back down because it's being rejected off the 21 EMA. But take a look to the left, guys, right there, right there, right there, there, and there. This is an area of support, and guys, once price is coming down, we can anticipate possibly that price will be rejected and bounce higher off the support. And guess what happens? We wait for this candle right there, closes above the line, and we have momentum to the upside, as indicated, as shown by other indicators that we're using, in this case, the MACD. Okay, so you can see areas of right there, price went up, down, up, and then finally break through, come back down, stopped at here, price went up, down, up. See, these are all areas of resistance. So resistance, you get resistance when price goes up, and when price comes down, you're looking at support, right? And these are all clues as to what can happen next as we look at the current candles. Okay, so that is it, guys. I'm pretty sure, because I haven't memorized my I haven't memorized this video here, because I'm really talking as I look at the different slides. adding more and more information to it. Okay, and let's take a look. How to trade with momentum, guys. Okay, let's take a look. Trading with momentum can give traders an edge. Okay, and this is definitely what I try to do in my free trade signals program. Instead of trading when the candles change to become bullish or bearish, that is futile if there's no understanding behind the reason for the candle color change. But when you recognize momentum starting with specific candles in bullish or bearish price patterns, the odds for a successful trade becomes real instead of just guessing, right? So you never want to guess. You want to have an understanding of price action, and that's reading the candles along with the indicators, how they work together. And we're always looking for momentum to get into a trade. So we don't want to guess anymore. We want to have the clues on the chart, and the algorithm that we're working with helps us with all of this. So next, and I believe that's next, is putting it all together. Let's take a look at some charts. Okay, guys. Okay. Well, take a look. Run out of time. Darn it. I finished my coffee. You can see that. Finished my coffee, and I've run out of time. And next week, hey guys, because I'm still on vacation, I can't teach you everything at one time, and I need to take a rest. I need to look after myself, but look forward to next week's video for part 2 on momentum trading, where we will examine tons of charts and see winning trades using momentum as the main driver of price action. So guys, I hope you enjoyed this video. I know it was long, but it's only one video per week, guys, and you're going to learn a ton of stuff. Even for some of the experienced traders, often you need a refresher or reminder as to what to look for when you're looking at charts. And I don't want you to guess. And just because you see sometimes a big, large candle in one direction, I don't want you to take a trade based on that big one candle, because you could be clearly trading in the wrong direction. Okay, so it's putting it all together. We're going to do all of that next week. And if you want to receive my free trade signals, send me your email address. I'll put you on my VIP list. Send it to right here, mskyj007@gmail.com. So there's my email address, guys. Send me an email telling me you want to receive my free trade signals. Guys, this previous week, I showed you that one trade that still gave us 67 pips. We held it open for a long time, but if you want to learn how to trade correctly, guys, all you have to do is get my free signals, take my trades, follow my instructions. You don't have to do any more than that. You don't even know you don't have to know how to trade. You don't have to have like a intense knowledge of trading. If you want to learn more, just keep watching my videos, and you'll learn as much as you want to learn. Okay, so that is it, guys. And again, back to me, back to my Wasaga Beach lifestyle. Cheers from Canada. Don't forget to subscribe. Hit the like button below, guys, because this tells me if you really truly enjoyed the video and you learned something, and helps me to go on and produce next week's video. I need encouragement as well. Okay, so hit the like button. If you want to send me a comment, do that below the video. Take care, guys, and we'll see you next week. Bye for now.